Welcome back to my channel. My name is Oge and it has been so long I taught on this channel. But today is market structure, and I decided to pick up market structure today because this is what a lot of traders, including me, struggled with. I struggled with market structure for like 3 years, going to four, because I had to learn that people mark different structure differently, mark structure differently, and I had to go to videos to watch other YouTube top ICT traders, and I got to learn that I made some points on how to mark market structure. And firstly, you have to understand what they call swing points. It's a three candle formation, right? They call it three swing points, right? Now, this is what they call a swing point, whereby the second candle comes out very well below here. The second candle comes out below, sorry for that. The second candle comes below, like very external below here. So what are you doing? You are making sure that the first candle and the first and the third candle, this first candle and the third candle are above for a buy scenario. For a sell scenario, let me draw again. For a sell scenario, we're looking at this, and the second candle will be above it, and the third candle will be below it, right? Making this a what? A swing point. Do you see that? Making that a swing point. Now, this is the first thing you have to do first to understand market structure. Now, we both know that price moves as higher high, higher low, higher high, and we categorize this as a break of structure, as a BOS, right? I thought of a simpler way to explain this for you to understand. Now we have this as a break of structure, and many of us are confused. When price is going up, when price gets here, it forms a swing point, sending us a signal that the buy momentum has come down and it wants to do a what we call a retracement. So many people call this the push up and call this retracement. Now, many people actually, well, it's actually common, consider this as a swing point being created here to clear out this swing point that was created to cause that retracement. Now, another thing you should consider now is there are two major structure. We have the strong retracement and the weak retracement. Some traders use the weak retracement, which is well known very well in all way. A weak retracement, right? Which we all know as a retracement. And there's what we call the strong retracement, right? Now, I had to learn, I went on JADCAP because I realized that he's one of ICT's top students, one of ICT's strongest traders, and I took my time to watch some of his videos. Sometimes I watch his chat just to see what he does, just to learn. I'm learning, and we are all traders, we are learning. And I had to learn that there's weak retracement and there's strong retracement. Now, weak retracement is when price does a higher high, create a swing point, and retraces back another swing point, takes it high. Some individuals categorize that area as a break of structure and mark that as an order block. That's where the weak retracement is still a good retracement. I never said it's a bad retracement. But my coach also said three candle body closure, one, two, and three. This is when price is selling for this retracement. What is your job? You have to make sure that this candle was being closed with a body from the previous candle, and this candle, second candle, was being closed with a body with the third candle. Will I consider this area as a BOS? Do you understand me? And let's assume price does a break of structure here, creating an engulfing candle that breaks structure. I will consider this as a strong break of structure. It does not also mean that when price does this as a swing point created here to low created here is not a break of structure. It is a break of structure, but I have come to learn and to understand too much of back testing, losing money because I lose money, and I'm trying to build myself as a swing trader, which can be very difficult using this weak retracement. So it's a kind of test, but I've come to realize that using the strong retracement for me that's trying to build herself as a swing trader, because I do 9 to 5, it's kind of a little bit better for me. I've also watched Jadcap because he said one of his video, he said I started as a trader. I started trading as a swing trader because I was a 9 to 5. But with time, I had to, when I finally quit my 9 to 5, then I transited into a day trader and a scalper. So I had to do my own personal research. I watched his market structure video, and I also learned that he marks structure to structure. He marks the weak retracement and the strong retracement. Then he clicked on me that, okay, let me try it. Now, going back to this structure, this is just the current market flow, right? Good. Now, what do I see here? I will start with this area. Do you see that? I have what? I have a retracement here, but I have this body close. One, two, three. This is what? A break of structure. I want to use the strong retracement and I also want to use the weak retracement, right? This body closed above this body and this candle body closed above this body, making this a strong retracement, right? Now, what am I looking for? Price kept going down, 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 and this was the last swing point that was created here. I told you swing point. One, one, two, three. And what happened? There was a break of structure here. Can you see it yourself? Now, looking inside again, I still want to use that strong retracement. Do you see? There's a high here, retracement. This just is, I'll call this a what? I'll call this an accumulation, a range. But now, if I want to go for a weak retracement, this is also a strong retracement because why? This retracement covered three candle. So there was a break of structure here. It just comes with practicing, and I keep practicing because there is no perfection in trading. You keep practicing and practicing. But now, what do we call a weak retracement? A weak retracement is something that created just a swing point, something like this. One candle closure. I am not saying it's a bad retracement. No, it's still a retracement, but you have to find the one that works for you. Do you understand? You have to find the one that works for you. There is no fake strategy. All strategies are good. But if you don't understand retracement and structure, the pullback and the push up, the pullback and the push up, the pullback and the push up, whatever strategy you are learning is going to be a problem. And it took me 3 years after the back and forth to learn that structure was my problem. And I had to go back to the foundation to learn structure. I had to go back to the foundation to learn structure. Now, when marking all these structures, that's where your PDRA comes in, your order block, your breaker block, your mitigation block, your rejection block, fair value gap, liquidity void, and your old lows and old highs. You can usually use equal lows and equal highs. This is a break of structure. Now, if I was using the weak structure, there was no break of structure here because it came out with a what? A weak. This signals to you a weak retracement, a weak break of structure. So this is not a break of structure at all. But if I'm using the weak retracement, right? Many individuals will consider this a break of structure because it comes with swing points. One, two, three swing points. One, two, three swing points. So I keep telling people, firstly, when you want to learn structure, the first stage is going to understand how swing point is being created. This is just 3 years to almost 4 years of losing money, and this was my clarity, and it became so real for me. So this was a break of structure here. But if you want to do a break of structure, you have to drag it to where there was a body. You can see this, right? To where there was a body, and you consider that a break BOS. Now, where does MSS come in? You can look at this. One, two, three. Body closing below each other. And what do I have? Also a swing point. And I consider this and what? MSS. Do you see that? But it's also, if you're looking for the weak retracement, you can see this is a swing point, but price tapped at our what mitigation block. Do you see that yourself? Now, this is what we call a weak retracement. Just two candle. The strong retracement says three candle and above based on ICT, but it's also a retracement, but I won't consider it a strong retracement. Do you get? So you have to go practice the steps I just said. Firstly, you have to go master. What are you mastering first? You're going to master understanding your swing points. When you understand swing points, then you understand the retracement level, candle, the weak and the strong retracement. It helps you know more about liquidity and then your trend if it's going on a higher high. These are the things. I'll just write the points here for you to see. First, your market structure, your swing points, your retracement, then trend. If it's bullish or bearish. And what next are you looking at? Your PD array. That's where your PD array comes in. I hope this is very helpful to anyone who is growing like me, and you can put in the practice. And well, I'll call psychology again to see how it goes. And thank you so much. Bye.